Thanks for tuning in to Countdown. My name is Neeraj Shah, and the markets are at the level that they were at when we started off the trading day today, about 1% lower. That's the essential sum and summary of today's trading day. As you can see, it's been a flattish day of trade, hardly any moves, and we've stayed lower, about 120 odd points. So no moves that we've seen in the benchmark indices per se. Even at the broader end of the spectrum, I don't think there has been too much of a movement. The Nifty Bank down about 1% and about 1% apiece for the mid caps and the small caps as well. The market breadth has not looked that great. I don't know if the volumes have been high in the session today. It smacks of a day when the volumes have been slightly indifferent compared to the last few days. Yes, indeed, the NSE cash volumes much lower than what we've usually seen. So the cash market participation certainly lower in the session today. It certainly seemed to be a day which was punctuated with lower participation, hardly any gyrations that we saw today. The F&O volumes though, pretty decent. We'll talk more about what's happening in the broader end of the spectrum in a bit. Devina will highlight all of that. Let me just bring up the large caps. You could argue that the market breadth improved just a little bit, but that usually tends to happen if there's overwhelming sense of green and some point of time the red claws back. Similarly, in today's session, when we started off just 3 stocks in the green, right now there were a few more, some PSUs essentially in the green. So BP, NTPC, HP, ONGC, Power Grid. Essentially, it's the PSU pack on the Nifty, same for Gas Authority of India, which is trading in the green. Aside of that, everything in the red. IT in the red, exporters in the red, banking in the red, and commodities in the red. So Vedanta is second highest loser on the index today. You don't have too many others. JSW Steel about a couple of percentage points lower in the session today. Amongst the heavyweights, the HDFC Twins and ICICI Bank have come off, which explains the weakness in the Nifty Bank. And Z continues to grind lower. In fact, I'm sure the Dish TV and the others are feeling the pinch too. But this is the top loser on the Nifty 50. So weak market breadth, and that's symptomatic of what's happening at the broader end of the spectrum too. The market breadth has not shown even a glimmer of a fight back in the session today. Yeah,
it's completely, if you would say the broader market space reflecting exactly what the sentiment on the larger indices have been. And it's a day where markets have taken a breather, some bit of profit taking off the table since the move has been too fast, too soon. Money off the table this afternoon. Let's take a look at individual movers then and some stocks that are in focus. Within the aviation pack today, we've got both the stocks, Jet Airways and Interglobe Aviation, that are in focus this afternoon. Interglobe Aviation, yet another report now coming in from Credit Suisse that has upgraded the counter. 1650 is the target price that they've put out. The stock's not doing a whole lot much in today's session. Jet Airways, on the other hand, sees a slight bit of a bounce back coming in. Other stocks in the move include the likes of an REC and PFC. Both these stocks are doing well in today's session. Heavy moves coming in on REC, 9% higher. PFC is up about 5% odd. Hathway Cables has moved up 13%. So strong moves coming on back of strong volumes. Losers in trade, like Neeraj highlighted, Z being down. Dish TV is the other counterparty there that's down in trade. 6.5% given up. Vodafone Idea is down 5.5%. So steep cuts coming in there from the telecom space as well. And Narcom continues to reel under pressure after the kind of big moves you've seen in the last 4 or 5 trading sessions, where there have been upper circuits, some profit taking, Narcom bringing it down by about 5%. Other stocks on the back of volume, you've got TTK Prestige, which is doing okay, 4.5% higher, good volumes. BHEL trades 2 crore shares. Volumes are significantly higher. The stock's up about 1.85%. And Symphony is the other one that is up 2.5%, and its trading volumes are more than 10 times the average trading volume. So that's what you've got in terms of the overall market breadth position. What's happening in the futures and options space? We've got Agam Vakil joining in for that. Agam, good afternoon.
Good afternoon. Well, a lot of changes as we move into expiry week. Currently, as far as the Nifty is concerned, some shorts building into the system. The Nifty futures are certainly indicating that, and that will be evident in the unwinding number that we've seen in the March series. On the other hand, April open interest seeing a 30% increase in open OI, so we'll be watching out for that. Rollovers currently standing at around 31%, but we'll get a better picture of rollovers over the course of the next 2 to 3 days. The Nifty banking futures again seeing rollovers at around 24% with an increase in OI when it comes to the April futures towards short positions. But moving on to several of your other stocks right now, or pardon me, your variables right now. We have India VIX, which has risen, and now it's inching back towards the mark of 16.84 to be precise right at this point in time. And in terms of changes in open interest, as one might expect, we're seeing writing around the 11,400 and 500 calls. Do remember that it is essentially the 11,600 call which has max OI, but considering the open interest surge we are seeing in the 11,500, we may very well see that level take back pole position when it comes to open interest. Moving on to stocks, we do have REC. That has been buzzing in trade, a lot of longs building in, as is the case for PFC, its acquirer, and PFC or Power Finance Corp is also up and about by as much as 5.5%. Besides REC and PFC, we also have NTPC building on the gains that we saw last Friday, up another 1.3%, a lot of longs building in there, and ONGC is the other, PSU, which is also in focus on the gaining end. So 4 stocks out there from the public sector space doing well in trade today and seeing significant amount of longs building in.
Right, Agam, thanks a lot for that. That's a quick wrap out in the futures and options space and what's been buzzing thereabouts. Let's begin with the global markets, which are not painting a very pretty picture today. The inversion of the yield curve has raised alarms about the impending recession in the US. What sort of an impact would that news have, along with other global factors, on the equity markets? Let's discuss all of that with Ian Harnett. He's the Chief Investment Strategist at Absolute Strategy Research. Ian, thanks very much for taking out the time. So let's start off with the, the yield spread now, the inverted yield curve, which we've been seeing for the first time since 2007. And what kind of a grim picture is it painting?
Well, I think that what we're trying to get across to people is that this is just the natural culmination of the type of policies that we've had and the lackluster economic growth that the global economy faces. I think what concerns us is that when we look at our activity surprise indicators and also our leading economic indicators, really for the first time for several years, we're seeing a synchronized slowdown coming through. And our worry is that the Fed going on pause, and really only the RBI being one of the few countries that's actually cut rates, that pause isn't going to be enough for this. We actually need to see a much more aggressive easing, and if that doesn't happen, then you see the pressure coming through on earnings, and then you see that in the equity markets, and the bond market is telling you that we're in for a much slower growth, lower inflation environment.
Are you factoring in that this could mean that this is a precursor to recession, or that is not a concern as yet?
Well, when we do our own survey of multi-asset investors around the world, where we got 250 institutions responding, we actually saw for the first time this view that you would get an inversion of the curve coming through, but there was still a lack of willingness, of about 38%, I think was the number of percentage of probabilities of a recession coming through. Indeed, our own economic forecasts don't yet price in a recession, but what we are seeing unequivocally is that the probabilities, the risk models about recession risk are rising, but less so for this year than they are actually for next year. So I think that, we still are saying to people, we're cautious, not bearish, because if there is a more aggressive policy response, if we saw more coming out of the Fed and synchronized easing, not only from China but also in the Eurozone and Japan, then you'd actually run the risk of not, or expect not to see a recession coming through. But without that more synchronized action, then I think that we will start to ramp up our recession probabilities as we go through the year.
Ian, good morning to you. In this wake of very high and easy liquidity being available, would you reckon that there might be a scenario wherein we might have recessionary periods or recessionary bursts, but equity markets or bond markets as well might not quite reflect that? The quantum of money that has come into the EMs in the last 2 or 3 months is probably one indication of how ETF money is flown in, despite whatever fundamentals might be existing within the EM pack.
I think that is certainly one of the things that you might see and might expect. But I think that our concern is how long run those flows might be. Historically, what we've seen when you're looking at a global strategist is that these kind of ETF flows, these kind of liquidity flows into emerging markets tend to be strongest when you get some dollar weakness. Now, temporarily we saw that, but typically when you see economic growth slow and when you go into the late cycle phase of the global economy, that tends to be an environment where, you know, you do see people rotate back towards the more defensive markets. That tends to be developed markets rather than EM, and actually the US market relative to the rest of the world. So I would be a bit concerned that some of the optimism that we've seen around the Indian market has actually now taken us into valuations which are probably quite extreme. You know, India actually has the same cyclically adjusted PE as the United States, for example. You know, people don't view that as being a sustainable level. So I think that you know, it's dangerous to assume that emerging markets and the Indian market will be able to escape that global slowdown, even though India is much more insulated.
And the counter that people would have to that is that India might actually come out, I mean, maybe other countries too, would have a period of earnings uptick. Reported earnings might do well. In the case of the US, because of the higher base of 2018, as well as I presume from what I learned from other experts about how the input costs for a lot of companies as a result of these trade tensions have gone up, we might actually see a period of lower earnings trajectory for the better part of 2019. And therefore, those two at loggerheads, those two completely countering each other, money might want to pursue growth.
Yeah, you know, I think that when you get weaker economic activity, that tends to depress earnings expectations, and as you say, growth strategies tend to win out. You know, so we would definitely agree with that. I think where we're nervous is that we think that there is still a very big disconnect between those earnings expectations that people have for the global markets and particularly emerging markets, and you know, the potential outcome. You know, so in terms of global markets, the current IBES expectations are running around about 5.5%, 6% positive. Our view is that those numbers are going to turn out 5 to 6% negative. And when you look at emerging markets, and I was just checking before the show, you know, IBES expectations for India plus 28%. Now, unless you get a very dynamic Indian economy and a global economy that's dynamic as well, then it's going to be very hard to deliver those kind of responses. The positive that the region has and India has is that capacity to still cut interest rates. And that will be the strength, rather for me, than the earnings and the valuation story.
So just one last question, Ian, to wrap up this discussion is the projection and the trajectory that you are seeing in terms of what happens to equity markets as a result of flows and the changes that we're seeing in the pattern of foreign flows.
Well, I think the thing that worries us is that when you look at the broader picture and the longer history, something is happening different this cycle. Previous cycles, we've seen real interest rates rise very rapidly, and that has led to shocks where the market has come down very sharply. What we see this time is that real interest rates have risen slowly. What we're projecting, and I'm afraid that India and emerging markets aren't going to escape this, is that trend volatility will be rising over the next couple of years. So we'll have these periods, as we have done in the last few months, where you have that nice rally, everybody gets excited again, and then what we'll find is that there isn't enough underlying growth, there isn't enough underlying earnings growth to sustain that. The valuations peak out, markets come down, and volatility heads back up again. And we think that you're just going to see that almost Japanification of global equity markets, sadly, for about the next 18 months. As I say, we're heading into late cycle. This tends to be the environment where risk assets tend to perform worse. So, you know, I think we're saying don't just buy the dips. We would actually be talking about sell the rallies for the investors that are listening to the show.
All right. Ian, we leave it at that. Thank you so very much for joining us this afternoon.
Thank you.
All right, a global opinion coming in there. Moving on then. Steel prices have recovered in the month of February and March. Iron ore prices had gone up, but steel makers could pass on the higher input costs. Now, cheaper imports are threatening to push prices lower. In addition, the government has refused to set a minimum import price. Nikki Mirchandani had a chat with the management of SAIL, Mr. Anil Kumar Chaudhary. He is the chairman at the company, and began by asking him if there is a scope for more price hikes. Listen in.
As far as prices are concerned, I would say that the prices are not on the decline, but there is a stability in the steel prices, mainly because of the increase in the prices of key raw materials, that is coking coal and iron ore. In the last few days, SAIL has not done any major hike in the prices, and the prices, particularly for flat products, they have gone up between 1,000 rupees to 1,500 rupees per ton. Since the coking coal prices and iron ore prices are firm, so what I believe that even in the coming months, the prices for steel products would continue to be stable as compared to the decline which we witnessed in the months of November to January 2019.
Sure, I get your point. Would you could provide us with a ballpark range of where do you see the Indian HRC prices moving going forward here on in 2019?
I feel that the prices should continue to be stable depending upon the prices of the key input materials. And as you know, the domestic prices are very closely linked with the international prices of steel. So I find that if the international prices of steel continue to be at a level of $530 to $535 per ton, the domestic prices should also be at a level of, particularly HR prices should also be at a level of somewhere between 42,000 to 43,000 rupees per ton.
All right, sir. So also I'd like to understand how much of a worry are imports for the industry and for the company right now. Do you think the Indonesia setting up an anti-dumping import duty to the tune of around 20% on Indian steel products is a cause of worry for the industry and sparks the fear of a trade war?
Yes, as far as imports are concerned, I would say it is basically the lower prices of imports which is more worrisome for the country. And if we look at the imports during the current financial year, they have been almost at par with what we had in the last financial year. So imports are not that much a worry as the domestic demand is. If the domestic demand continues to be good, definitely we would like to sell the material within the country. And if the international prices continue to be high, there will not be much of a problem of the imports. As far as this Indonesia imposing an anti-dumping duty of 20% on the imports going into that, we may not be worried so long as the demand in the domestic market continues to be good, because we should be more happy selling it in the domestic market and giving a stabilized prices in the domestic market than looking for export from our country.
Sure, you addressed that the minimum import price should be set by the government, but then the ministry has clearly rejected the proposal for MIP. So now I'd like to understand that the company along with the industry is pitching for any more safeguard measures given MIP is now out of the way, and especially given that we're facing cheap imports from Iran.
No, as far as this MIP is concerned, it is a safeguard measure. If not MIP, we are going in for the other safeguard measures for which the documentation has already been done with the DGTR, and our request is being looked into. In fact, there should be some automatic mechanism available that if the imports are coming below a particular level, that mechanism should get triggered and there should be automatic safeguard duty. This is what we have been trying to take up with the authorities.
Sure, if you could provide more color as to what these levels are and what are the additional safeguard duty that the industry has been pitching right now?
No, this will be decided by the concerned authorities and not by the industry. We have requested that they should consider, and it is cheap imports are causing injury to the domestic steel producers. So call will be taken by the government, by the authorities.
Sure, I get the point that the call at the end of the day, the final decision lies with the government. But what are the proposals that the industry or the company has proposed?
No, proposals are not given. We have given them that what is the cost outside and what prices the imports are coming into the country. So we never suggest the percentage. Percentage is decided by the authorities only.
Could you just help us understand what is the differential between the import prices and the landed on landed basis and the current domestic prices of HRC right now?
I would say yes, there is a differential between the two, but meanwhile the international prices have gone up. So this gap, which used to be earlier, it has come down now substantially. So I find that today the domestic prices and the import prices, they are almost at par.
All right. So I'd like to understand, there was an article from Bloomberg, a report suggested that Indian steel body is apparently seeking a CCI probe on alleged iron ore cartelization. We even saw some of the private miners along with NMDC going ahead and taking a price hike in the month of Feb, which was a mid-month price hike. I'd like to understand, could you tell us which is at what stage the investigation is and what could be the potential penalty, if at all, if there is a case of, if these players are found to be guilty?
Now, as far as iron ore is concerned, SAIL is having its captive sources. We have been getting 100% of iron ore from our own sources. So I may not be able to comment about it, whether there is any cartelization or not.
All right, I get your point that you're a completely integrated player, but then you've also been voicing the opinion of how iron ore prices have been going up higher. Just at the start of the phone, I believe you mentioned about how, that was a cause of concern for the industry as a whole. On account of that, any kind of progress that you've seen in this probe? And also, do you think that how important is the timely execution of upcoming iron ore auction? I think the timeline to kickstart the process is around July 2019. So do you think the government would be able to adhere to these timelines?
Yes, government should be able to adhere to the timelines, and I know this will be having repercussions on the Indian steel manufacturing, particularly for the integrated steel sector. Since SAIL is insulated from all these things, so it may not be fair on my part to comment about this.
Okay, just on behalf of the industry, in that case, sir, also since the company is integrated player, do you see any kind of disruptions coming on account of the auction process, which is going to be coming up in July 2019? Any kind of beneficiary that the company would be to the tune of what %, if at all the iron ore prices go up, because the company is integrated player as compared to some of the non-integrated players like JSW Steel?
Yes, if there is a disruption, naturally it will affect the steel prices because one has to be dependent more on the imported iron ore. But as I said earlier, that we are insulated from these changes. So I may not be able to comment about this anymore, but I have stated.
Okay. Sir, the last question in that case is the company has annulled an EOI for 100% stake sale in Durgapur alloy steel plant and has initiated a fresh process to that effect. I'd like to understand the reason for the same and also update, if at all, the new process has been kick-started right now and which stages are we?
Yes, new process, it is still going on, and we will be out with the EOI request very soon. So we are working on it.
By when can we expect this, the EOI to come in? Can we expect it by the second quarter of FY20 or the first one?
I may not be able to comment about this. I can only say that we have been working on it, and as and when the clearances are in place, we should be able to go ahead with the EOI request.
All right, that is the management of SAIL there. The other one that we're talking to is Greenlam Industries, which has planned a 25 crore capacity expansion. The resultant capex will increase its capacity by 1.6 million laminate sheets per annum. Let's get more details on this with Ashok Sharma. He's the CFO at the company. This news obviously is not today's news. It has been announced a few days ago and the stock had reacted to it then. But thanks a lot for joining in, Sharma. Just quickly highlight for us, what is the investment case for this? And are you seeing a big pickup in demand that you're looking for a capacity expansion at this juncture?
Yeah, if you see, right now we have 14 million sheets capacity, and which is running at 102% as per the Q3. So we need this capacity. We need this capacity for our future growth, both domestically as well as export. So it's more since we have reached up to 100% utilization of the existing capacity. So that's why this expansion, and we are doing this expansion at our existing, one of our existing plant. So this will be more of a brownfield expansion.
By when do you expect completion of this, and when does it go on stream?
This will take around 3 quarters. We hope to get it in the Q3 of FY20.
Okay, so there's no material change in terms of the demand. You're just saying that you've reached 100% capacity, so you want to make sure that you know, if at all there is the case of better prospects, you will be able to cater to that. So at this juncture, is there any improvement in the industry?
As of now, there is not much improvement. It is more of a status quo of previous quarters.
Okay. Let's talk a little bit more about the volume picture at this point in time. You know, so far, we are already a majority part down with Q4. How have the volumes been so far? Have they picked up from Q3?
No, it is as of now, it doesn't look that there is any material change in the volume demand also. It looks to be subdued and remains to the same what is there in the earlier quarters.
Okay. I'm assuming your margin would also be somewhere closer to 13-14% as per...
it will be in the range of around 12.5-13% kind of.
Okay. Let's talk about the product mix and how exports have been shaping up for you. I mean, would you be able to give us a picture as to how, if at all, there has been a difference between the domestic demand as well as the export demand?
Overall export, if you see, even though in value terms the export has gone up because of our growth in dollar terms as well as in rupee because of depreciation. But in volume terms, both demands looks to be same. Yeah, some of the sector may be doing well, but overall it remains to be same.
Okay. This new expansion that you're doing, Mr. Sharma, 25 crores is what you're going to be pumping into this?
Approximately 25 crores. Since this is a brownfield expansion, so this will be approximately 25 crores.
And the funding of this will be done via?
This will be through internal accrual because not much funding is required, and this also will be over a period of next 9 months. So mix of some debt, some balance from internal accrual.
Okay. Just, you know, give us a picture as to, you know, what's happening with regards to pricing, on the pricing front, whether or not there is a possibility of price hikes, and how has the raw material picture been for the industry?
Raw materials remains, now it is more or less stable. Previously, around 1-2 quarters before, 3 quarter before, there was some movement. But now raw materials are fairly stabilized.
Okay. And in terms of pricing at your end?
Yeah, pricing normally we go and increase as and when there is an increase in as and when there is an increase in the raw material prices. Those are remain stable. So we are not seeing any increase in the pricing also.
Okay, and even in the near term, you're not anticipating any price hikes at your end?
No.
Okay, got that. Mr. Sharma, thanks very much for joining us. Really appreciate you taking out the time.
Thank you.
Management at Greenlam, with regards to the capacity expansion that they had announced a few days ago. 25 crores is what they're going to be pumping in. There's no material change in the demand picture, but just at the fact that they've reached 100% capacity utilization in the current plant. So there's more of a brownfield expansion for them. Funding will be done via internal accruals. The stock, though, today's session is down 4.5%. Coming back to the markets then, which are looking weak, and 1.2% given up on the index. That's at 11,318 right now for the Nifty. The banks are looking equally weak, 1 1/3% given down for the Nifty Bank. That's 400 points off. Worst performer, Z, followed by Bharti Infratel, which is looking weak. Yes Bank gives up some steam in today's session. That stock's down to 247. Handful of 8 or 9 gainers. Top gainer is IOC. The entire oil and gas pack that's doing well in today's session. So HP, BP, IOC, and even an ONGC, 1.5% higher for that counter. Let's bring in our market expert then. Hemen Kapadia of KRChoksey is joining us right now on the show. Along with him, Sumeet Bagadia of Choice Broking is also there. Gentlemen, good afternoon to both of you. I'm going to start off with you, Hemen. First off, on the Nifty, taking a breather in today's session, some profit taking. But does that dent the overall picture?
Very good afternoon to you, Devina. No, it doesn't dent, but frankly speaking, this was very much in the asking. We went like a bat out of hell. It couldn't sustain at that speed and the quantum which we'd seen. We had seen open interest in terms of the call option at 11,500, 600. So, but yeah, coming back to the main question, no, I don't think the overall picture changes. It could take some time. I think the first indication came in when the Nifty and the Bank Nifty shared some 10 and 13% OI on Friday itself. The VIX has gone up to 17 now, almost 16.92. So everything seems to suggest that this correction is on. Probably the settlement will go in. I think the next 3 days we will remain corrective. There could be bounces, but no, the bigger picture remains positive. I think it would be a buy on declines, but there could be some time retracement. We've had a brilliant run up, so I have a feeling we might take around 5-7 trading sessions to consolidate. I don't see a very deep cut. I mean, we've already lost 250 points almost from the high. So below 11.3 and 11.235, I wouldn't be very bearish, but I have a feeling time could be taken.
Okay. Sumeet Bagadia, what about you? Your index calls?
Well, there is a possibility that we might see some correction from present levels. Already we have seen a sell-off in Nifty and Bank Nifty. It seems that Nifty can move down to 11,250 levels. Those who have taken short positions, they can hold on the existing positions with the trailing stop losses. And if anyone wants to initiate a fresh position, then that should be on sell side for the downside target of 11,250 levels. On the other side, Bank Nifty is also looking some more weak. There is a possibility that we might see a move till 29,000 or 28,800 levels. So for a trading perspective, it's better to be on sell side. 29,500 is the resistance for Bank Nifty. Till that time, 29,500 is not taken away. One can initiate sell positions for the targets of 29,000 and 28,800 levels.
Okay, Hemen, I believe you're playing your view with an option strategy. Could you run us through that?
Yes, Devina. Last week I gave 11,600 call option sell. We didn't come to 11.6. We went to 11,555 or 564. So, but this time what I've done is I would sell I'd like to sell a pair, Devina, a strangle out of the money. Sell the 11,600 call option on a bounce and sell the 11,000 put option, because I have a feeling that with this correction setting in, at least for the next fight. But sorry, I just need to specify one thing. This is for the next series, because there's hardly any premium left for the current series. So just one clarification. This is for the next series. The idea is not to hold for the whole series, but I think for 5 trading sessions or 7 trading sessions, we are going to remain. Neither I think we're taking out 11.6. Neither are we taking out 11,000. So 6 trading session call, sell the 11.6 call and the 11,000 put.
Okay, let's talk stocks then, and I'll keep it with you, Hemen. You've got a sell call on ACC and you've got a sell call on UPL.
Yes, I think ACC is more of a defensive call, in the sense ACC is in an uptrend, but I'm anticipating a correction down to 1530 odd. So sell in ACC, stop loss 1590, target 1530. I'm looking at a target of 1630, but right now it's a sell call. It would be a buy call a week later. And the other stock, which is simply, I mean, long-term point of view, UPL is a 1100 rupee stock, but we've had a brilliant run up. We walked into a correction. So sell in UPL on a small bounce at 9 and 7, stop loss 930, target 890, Devina.
Okay, got that. Some more stocks from Sumeet as well, and he's got one buy and one sell call. Your buy call ONGC, that's up in trade today, and you're selling Havells, Sumeet.
Absolutely right. ONGC is looking good to me. ONGC today has given a good upside move, and now looking at the chart, it seems that from here on, the accelerated move can continue, and on higher side, we can see levels of around 160, 162. For a trading perspective, those who have taken long positions in ONGC, they can hold on the existing long positions with a stop loss to be placed at around 150 on lower side, and the fresh longs can be initiated for the upside target of 160 and 162 levels. The second call for the day is Havells. Havells is looking weak. It seems that Havels can move down till 715 or even till 725 or even till 710 levels. Those who have taken short positions in Havels, they can hold on the existing short positions with the stop loss to be placed at 750 levels on higher side for the downside target of 725 and then 710 in next couple of days.
Okay, got that. Some few stocks that are making a good headway in today's trade are the oil marketing companies, and they've been pretty buoyant over the last few trading sessions. Sumeet, and HPBP IOC within the pack, what would your favorite be if at all you had to take a trade?
See, I think all these stocks are looking good on charts. In fact, today oil marketing companies has given a good move, and stocks are trading at high levels. It seems that from here on we can see upside move in all the three counters. And if anyone wants to select one counter at present levels out of three, then that should be IOC. IOC looks more strong compared to other two. It seems that IOC can move up till 165. That would be the immediate target, and 3 days back the high was somewhere at around 166 levels. So that would be the immediate resistance for the stock. Once the stock is able to break the resistance mark, then there is a possibility that we might see a move till 172 or even till 175 levels. So one can initiate long positions in IOC at the current market price with a stop loss to be placed at 156 or 157 on lower side for the upside target of 165 and then 172 levels.
All right. Another big mover in trade today is the Hathway Cables. Stocks almost nudging 30 now. In the last 1 month, including today's gains, it's up about 17%. And in the last 7 days, up about 7%. Would you trade Hathway? I mean, it's a smaller name, but decent volumes. Sumeet?
Well, I think this counter has, no doubt this counter has given a very good move today. But the charts are not that convincing. If the stock is able to sustain and give close above 30, then there is a possibility that we might see some upside traction in which we can see a stock towards moving towards 35 or 38 levels. But very frankly, looking at the chart, it seems it's better to avoid fresh long positions at the current market price. And those who have taken long positions at lower levels, they can maintain trailing. Stop loss somewhere at around 28-10 levels for the upside target of 32. But it's better to avoid fresh long positions in the counter.
Okay, let's welcome in our fundamental guests on the show, Sumeet Kalra of Target Investing with us. And Sumeet, a day of pullback and a lot of high-flying stocks have started taking a bit of a breather or corrective moves. Let's start off with some of the news flow heavy companies. What's happening with the Z Group? At 450 odd for Z TV or at 40 odd for Dish TV, almost everybody was talking about how a deal is imminent and the prices will stay high or move even higher. They've just come back. I mean, is this the market saying that maybe the deal is some time away?
So I think we were a sell at that point also. We are a sell right now also. Because if you see, the dynamics have changed of the media industry, especially on the television side. Now if you see the packages, even with 50 channels, the costs have gone 30 to 40% up on every one. So over there the dynamics have changed, and I think the viewership calculation will also change. That will eventually hurt the subscriptions and the advertising. So I think even the buyers are waiting for few more weeks of numbers to come up to see actually how Z Entertainment or Z channels are performing, and then give them a valuation. On a historical trend, you can't give a valuation to a company as of now which has a drastic change in the whole revenue model. So I think they're waiting for that. It will be still, I think, a month or two before anything solidifies on the deal end. Because I think it's just been a month almost where the subscription revenues have kicked in. They might see a quarter or something like that, then decide how the valuations have to be done. Because I think right now that kind of drastic change in the revenue side will be most important for any buyer.
You know, it's interesting, and at times I wonder how would players like Z or some of the others come up and combat Netflix and Amazon when YouTube has taken a decision to pull out of that race on the global level, right? They have gone out of this fight with Amazon and Netflix. because content creation is just so much expensive, and while ZEE5 is doing what it is doing and we see the banners, I'm guessing they're paying a bomb for the content cost as well. Is it garnering the quantum of subscribers that are needed to run this profitably is the question, right?
But the point being is, will this digital platform outweigh the regular bread and butter TV business for them? Because so far, for Zee, it's their bread and butter business, which has been the reason for their earnings, and whatever brokerage calls have come about have mainly focused, while obviously the digital platform is an important foray for them, but the penetration is not all that high at this point in time.
Yeah, but brokerages have been assigning valuations to this ZEE5, and that's the question, right?
Because that's burning around 100 crores per month kind of a value burn, and it's not even getting you 20 crores on a static basis, because they are offering annual and then monthly.
But it's not reflected too poorly in terms of the Zee numbers that we've been seeing coming out of.
See, it's more of your cash burn. Yeah. I see it's more of a cash burn right now. And when your revenue stream again is getting hit by such a regulation, your cash flows will eventually get hurt. What you're talking about, the advertising and the traditional business, that itself has changed. So when that regulation hits, it's not that everyone is subscribing for Zee TV. I don't have it, and I'm not really missing that part. So that's what I'm saying. So there has to be a 3-month, 4-month view. Even if I am a buyer right now as a minority stakeholder, I will look at it, how it pans out for a quarter or two, and see how their revenues and subscriptions have taken a hit. Because they will not go up. They will mostly be stable or come down. Because I think over there now, when you're accounting for Zee TV, it's per channel game now. Now it's not the per network kind of a game. So I think over there the valuations will take a knock, and I think it's a better place to exit out.
But no, my point also being is, what kind of a time frame do you keep in mind for this? I mean,
so I'm saying next 2 quarters will decide how the whole regulation change has impacted their revenues on the stability.
Because we've had conversations, and I think we've like before the entire issue with the promoter pledge broke out. Yeah. I mean, there were conversations around this very topic with the management of Zee, talking about how this digital platform is going to work for them with the kind of expensive content that you have to keep burning money behind, and they were. At that point, they really didn't seem to perturb, because for them, their mainstream flow.
Yeah, that was flow. But that's where I'm saying, so that my mainstream is getting knocked down itself. Yeah. Now, on that basis, if your cash flow is being assessed, then you have to see next 2 quarters how it works out.
But keep in mind, it's not just Zee. I mean, Dish TV 2 is the other one which is down, which is I was wondering if there's something deal-related out here. But watch out for Zee and Dish. They've both been lower in the session today. The other one that's corrected quite strongly is Maruti Suzuki. It's down for the 8th straight day. It's the longest losing streak for the company since July 2013. And that speaks volumes about what kind of pain Maruti is going through. The first instant that this pain came about in the NBFC space, Maruti sank all the way to 6,500 or thereabouts. If you pull up the 6-month chart, you'll see that it's one more time in the recent past is nudged these levels of 6,500, 6,600 if I'm not wrong, or 6,700 there as the case may be. We'll get the 6-month chart and you'll see that. Post that it had a bounce, but now resting close to 6,500 for Maruti Suzuki. Last 7 days about 8% lower. The 6-month chart of Maruti Suzuki will show you that how the stock had corrected to about 6,500 for a brief period before trying to recover as well. So pain all right. The question is, can this continue? Sumeet, what are your thoughts?
I think this can go even further down, and it can slide really badly. Because if you see, this is the 4th month of production cuts, whether you talk about Maruti or any other motor company. This is overall, the auto industry is seen for the first time the 4th month of production cut. That speaks volume for what is happening on the ground. So there's a lot of inventory pile up, especially in the 4-wheeler and the 2-wheelers. When I say 4-wheelers, I'm talking about the cars. Now over there, the problem is 2 levels. One is the consumer financing. That is, okay, that NBFCs have issue. Second is the dealer financing. We've had a chat with dealers, and certain dealers are being asked to give mortgage papers. So earlier for financing, the inventory was sufficient enough. So if you're buying a crore inventory, for me to give you a credit line, that was sufficient enough. Now if I'm giving you 1 crore line to buy that inventory, you need to give me further more assets. So that for a dealer, I think is the biggest knock in the business, where your margins are squeezing out, your discounts are going heavy on heavy. Then if the dealer system really gets a knock, which I think it is, and to a certain extent, certain dealerships have closed in a city like Delhi or anywhere I see. And there are certain dealers going bust. So now over there, if this consumer slowdown comes out very badly, then Maruti has way more downside than coming back sooner.
I think we had the same combination of Hemen and Sameer last week, and the same question, and I think Hemen said it can go down to 6,200 also.
No, I think he said 6, I said 5,800.
Oh, okay. Worse off than that. Yeah.
So we are still looking for registration numbers. Let's see how March pans out, and then we'll see how it comes. But yeah.
And Hemen, are you still looking for 5,800?
Yes, I think so. Nothing changes. Neeraj, if you look at the charts, last 6 months, there's a 6-month now, we've had a range, and normally the range happens when either we're consolidating or distributing. Now the upside breakout chances have almost come down to nil. Everything is in sell on the longer term chart. So the way I look at it, it is a distribution pattern, but for formality's sake, we need to decisively break 6,500. So I still stick to 5.8.
All right, that's pretty bearish calls coming in on the counter, Maruti Suzuki. So just let me ask you, like, so for somebody who has been an investor of Maruti, if there is a moment of transition, does that happen within the auto industry into another player, or does it completely move out of auto?
So see, we are investors, we are still investors, but we reduced our weight in December itself. So it's not that we have totally gone out of Maruti, we still own it. But if you've bought it at really low levels, then there's no need to panic out here or anything. But I think now next phase will somehow come to Tata Motors and Bajaj Auto.
The point is, who has been able to buy Maruti at very low levels? Because the stock has, the last time it came here, it went back up to 73.
See, when I say low,
you know, so.
No, there are people.
So this
who
is probably one of the lowest levels that you can get Maruti at.
No, I don't think so. I disagree over there, because the only point is the ground data is really showing you a bad space.
Okay.
See, if you see past 1.5 years, if I stretch, Ola and Uber were the main contributors to Maruti. Now, if they switch to electric, let's say in that certain sense, or they slow down on the registrations, they've slowed down pretty quickly. Now, whatever additional money is going is for global expansion.
Yeah.
It's not coming for domestic markets. Now, when you do that, and your main customer, which is Maruti and Ola and Uber, this combination starts to falter, then the consumer demand actually goes out. It was already out. I'm not saying it was already in. That's why you see very less new models getting launched. Even a WagonR, which they relaunched, that's one of the best-selling models for them. They were only able to give 15,000 bookings for that. If I compare it historically, on average, Maruti has had 35 to 40,000 bookings for a relaunch model as well. So that really tells you that something is systematically changing in the industry. That's what, if I go far-fetched and take a call, then I think that high growth phase is somehow getting out of the system, and you're coming on this kind of a large mature growth.
Yeah, but let's see. I mean, the dichotomy to this, and I know we've dwindled the Maruti for too long, but the slight different stance to it could be something that Pramod Guppi was taking today as well. That maybe the market is now no longer wanting to get into the base level cars, or wanting to go slightly higher, which is why Swift Desire is amongst the highest selling cars. Two, the NBFC space, and I take on board the inventory. What I'm saying is that the NBFC crisis that hit might have hit financing as well, and if that kind of eases out a bit, you might actually see some bit of buying coming back into the low level cars as well.
See, on a counter to that, I'm just pushing the argument up. If you see NBFCs since October, if you see the data of commercial paper markets, right, that's the main financer for auto companies, auto financing companies, the commercial paper market. Now, if you see there, only a 10% has gone to non-group NBFCs. When I say non-group, I mean individual, these smaller NBFCs, like even like a Edelweiss GM Financial, 90% of the money has been raised by HDFC itself. So that speaks volume of what is happening on the commercial paper market. So this is not going to sort very quickly.
Very quickly.
So I think next 6 to 9 months, I see further downside rather than seeing any kind of signs of recovery from the system. That's what I mean.
So, by the way, as we speak, Hero MotoCorp is trading in 52-week lows. So it's not just Maruti, but I think a clutch of other names have come off quite rapidly at 2573. There's pain in the system for Hero MotoCorp as well.
And one stock which is trading at the day's high is probably Jet Airways. The stock started off, as we took a check at the start of the show, was somewhere closer to about 3.5%, and now has moved up pretty sharply. I think it moved up 7%, now is up closer to 6%, but 239. A complete washout for this stock, though, from its highs. So a 5-7% move on the upside on a day or two would really, do much for an investor holding the stock at levels of about 600, 650, 700. I mean, it really wouldn't do much. I mean, for a trader, maybe, yeah. Hemen, would you trade Jet?
Nope.
So for a trader also, no?
My refund is still stuck with Jet, so I won't trade in it.
Okay. No, but aside from your personal bias.
Okay. Frankly speaking, I always believe you fly airlines, don't buy the stocks. I don't believe in it. We've been moving sideways, but I'd prefer safe. If I do want to lose money, might as well do it on government oil PSUs. Why touch Jet? They are as unpredictable and as dangerous, frankly speaking.
Okay, got that. Sumeet, Bagadia, you given your call in the oil and gas space, you like an ONGC. Anything else over the last half an hour that has caught your eye?
Today markets are weak, so there are very less stock on buy side. What we are seeing is a weakness in most of these stocks. I think at present UPL is looking weak on charts, and UPL has given a good correction today. It seems the correction will continue, and in next 1 or 2 days we can see a move till 880 levels also. Those who are having sell positions in UPL, they can hold on the existing positions with the trailing stop losses to be placed at around 920 levels, and one can initiate fresh shorts for the targets of around 880 levels on lower side.
Has anything changed for Yes Bank? It's down to 2.5% today, but 246 is where it's trading at. Last few days, and the overall trend for Yes Bank has been more positive. Does this change anything? Would you take a short position now, or just carry on with your longs, considering that this would just be money off the table for some time?
This is a correction purely for 1 or 2 days. We feel that the trend for Yes Bank has changed, and now from bearish, it has come into a bullish trend. We feel that sooner or later Yes Bank will break the levels of around 260 on higher side, and then the counter will move till 280 or 300 levels. We feel any dip in Yes Bank till 240 or 235 levels should be used as buying opportunity. So those who are having positions for the time horizon of 3 to 6 months, they can hold on their long positions, and those who are traders, they should exit and again enter at lower levels somewhere at around 230 to 35. And on higher side, the resistance is placed at around 255.60. Once the stock is able to break the resistance levels, we will see a stock moving towards 280 or 300 levels.
A couple of stocks which are doing well. One of them is Jubilant Food. I reckon it's been on an uptrend for the last few days, 7 or 8 trading sessions, and at 1448 is packing quite a punch. So good going there. Do watch out for Jubilant Food Works, 10% higher in trade. The other one, and I don't know if it's actually across the pack or no, but Balrampur Chini is certainly in the green even now. I don't know if the likes of Dhampur and some of the others too have been in the green today, but Balrampur certainly is at 134. Now Dhampur is in. Balrampur Chini certainly is moving up. So let's stick the conversation to Jubilant Food Works, 9% higher in trade. They made that small announcement which was corrected before the markets open, and therefore we didn't see too much of a continued reaction on the stock. First, the fundamental perspective, Sameer. What would you do with the Jubilant Food Works? Has had a strong gain until now. Would you take some chips off the table, or is it a good stock to stay invested in, and why?
So we are staying invested. Why? Because if you see we are mainly concerned with the cash flows which they are able to generate past couple of years, and I think that is now growing even further. So I think over there, and the Bangladesh gamble, let's say right now, I want to call it a gamble, they've taken it up. So I think that will really play well for them, at least in terms of valuations over here as well. And I think for a couple of quarters, I will still see it. I'll not add to it as of now, whether even it goes to 25-30% up from here. I won't add at these valuations because my buying is low, but I won't exit as of now.
Okay. Hemen, what about the charts?
Jubilant has given an upward breakout from an ascending triangle in the weekly chart. So I would be bullish on every decline as long as it remains above 1400. I have a feeling we are heading towards 1500 and probably 1550, Neeraj.
1550?
Yeah, 1500 and then 1550.
Okay, 1500 and then 1550. So stay invested seems to be the call, both fundamentally and technically, on Jubilant FoodWorks. Sumeet, Kalra, before we take that break, a stock that you would be comfortable putting fresh money to work right now, and why?
Petronet LNG. I've dragged that stock out here because over there I feel the fundamentals are still yet to play out. June and July is very close. The capacity expansion is doing well and further capacity is kicking in. And on the trips where they have to do 10 per month kind of a trips, they're doing around 14 to 15 as of now. So I think that 30 to 40% upside is very cleanly there on the volumes. On the pricing, they're able to pass that through. And I think even the Kochi pipeline issue, which is through GAIL, that is in works. So by December, that should be sorted out, if not January 2020. So I think next 12 to 18 months is really good for it. And it's the best stock to be in that volatile markets where it doesn't fall much. And I see a lot of volatility in next couple of months at least.
Point is, it doesn't fall much, but it doesn't gain much.
Yeah, but that's for the long investor. We've always learned that it shouldn't fall much, because when the markets fall, your actually outperformance goes to underperformance, and for that.
So you're just banking on capital protection via creating. Instead of creating,
there is upside. There is a fundamental. It has 4,500 crores cash on books. There's nothing which I'm just buying for that heck of it. But it's a good place to be safe in. That's all.
Okay. Well, let's take that break. Jet Airways though is on a roll, or is flying high, whichever corollary you want to use. But it's 8.5% up now. 25 million shares traded on the NSE alone. It's a big buzzer, 245 and counting. Remember, various media news have reported that the board meet underway, yes, and there could be either Naresh Goyal bringing the stake down or exiting the company, whichever shape and form the news comes out, and we'll get to know about it. But there is certainly some activity. And in the last few minutes, there has been both price and volume action. A sudden spurt in volumes accompanied by this uptick in price. No smoke without fire, maybe. Don't just quite know what the fire is right now. But it is certainly on fire. 246 right now and counting. We'll take a break, come back and see what Jet Airways is up to then in about 2-3 minutes from now. And of course, talk about that fundamentally and technically once again. Maybe that will be the stock of the last half an hour. As we hit that break though, hear out Pramod Gabbi as a time when election uncertainty, rising oil prices and global growth concerns weigh on the markets. He is advising people to focus on fundamentals like consumption stocks. Hear out why.
Certain sectors naturally lend itself to better ROCEs, particularly consumer, tech and pharma historically, but consumer certainly, because the nature of demand in these sectors have been relatively stable. They're not that volatile. And these sectors have lent themselves to building a moat around themselves through brand and distribution network, although arguably it's becoming harder and harder to defend yourself through brands, because social media is allowing new brands to come up fairly quickly. Distribution, you can put your products on an Amazon or Flipkart overnight and get access to distribution across the country. But having said that, they still remain one of the sectors where you see companies generating ROCs north of not just 15%, which is the cost of capital in the country. We've seen the Levers and Colgates of the world with 100% ROCs. So consumer generally is a...
But then that's the dichotomy, right? Because on one side when you're saying you won't look at valuations, but they're steeply valued. But at the same time, they're also giving you that high ROC. So you tilt it in favor of the ROC instead of the valuation.
Absolutely. Although I would argue that in Levers and Colgate case, the growth is not clear, right? Growth is not obvious. So we would look for ROC as a starting point, and then with a little bit of growth opportunity, I think you can easily overcome the valuation issue. Like I said, 3 years of compounding at 15-20%, valuation multiple becomes irrelevant because the multiple itself doesn't compound over time.
I have a follow-up to that. Two-part question. One, are there enough opportunities in the listed space which are smaller in nature and therefore higher growth in the consumption space available? And two, how easy it is to extrapolate growth for these companies? Because as one of the CEOs of a large FMCG firm was telling me that while these new age fancy names with higher returns and arguably higher growth trajectory took center stage for a while, they found it extremely difficult to expand beyond the 3 or 4 or 5 metros. A lot of these brands have tried and then, as he said, thug gaye.
True.
So my question is, in the listed space, are these opportunities available in the consumption space?
Yes, they are. In fact, like you said, expanding distribution is not anybody's cup of tea, particularly in the shorter term. So that remains a longer term edge. But more importantly, I think generating internal efficiencies at the operational level. Pricing power need to be looked at in an inverse way, where even your ability, or rather your ability to grow your margins without having to take price hikes is perhaps a more sustainable competitive advantage than exercising the power of your brand to take price hikes, because price hikes allows competition also to take price hikes and breathe more freely. Whereas if you're generating your margin expansion through operational efficiencies and keeping the lid on the prices, then you're sort of suffocating your competition, and that's a much better, much more sustainable competitive advantage. But having said that, I think you question about the listed universe offering these opportunities very pertinent. As we wrote in a note a couple of weeks ago, increasingly economic activity in India is moving away from the listed market, right? So you see the participation of multinationals, participation of private equity and venture capital, SoftBank funded pretty much everything you and I use on a daily basis, be it the ride-sharing companies or the Amazons and Flipkarts, are not exposed to the listed market. And look at our own consumption basket. Quite a lot of that, particularly electronics, is all imported stuff, right? So there are no companies which are manufacturing goods incrementally which are part of the listed universe, nor at the distribution and the services level.
Not at the ancillary levels either.
Nor at the ancillaries. There are, of course, some of the smaller cap companies which are feeding into the growth of these companies. But by and large, the ability for Nifty or the Sensex to reflect economic activity is dwindling day by day.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint. 25 minutes left for the markets to shut shop. Pull up what the European markets are up to right now and see what that side of the world is doing. Well, under pressure, not as much as the rest of the pack, but remember, Europe and US markets did correct quite significantly in Friday's session already. The volumes, and let's see if there's a pickup from the 20,000 crore number that we had when we started the show on the NSE cash. 25,000, still lower than what a usual day throws up, though the F&O volumes seem to be okay. India VIX should come up on your screen once. And then just want to mark Jet Airways once more. First, India VIX 16.76, so a bit of a pullback there, a pull up there too. And now let's pull up Jet Airways once. It's been a very active stock. Has it gained more? Yes, it has. Now it's up 10% and trading in or around the highest point of the day. This is remarkable. In the last 6 minutes, it's added 6 million shares to its volumes. I remember talking about this, 7 minutes ago, and the volumes were 24 million shares. Now it's 31.44 million shares. So the price volume activity very, very brisk in Jet Airways. Okay, let's get in Yash Upadhyay to talk about the Fab 4 stocks of the day. He joins in right now. And Yash, I hope Jet Airways is not one of those on your list.
Not really, Neeraj. I've tried to make it a more diverse set of Fab 4 stocks. We'll start with TTK Prestige. That one's up about 5% after the company said that it would be considering the proposal of a bonus issue at its board meet on March 29th. Oil marketing companies are in focus, Indian Oil being one of them, up close to 4% in today's day of trade after crude oil prices corrected by over 1%, the most in almost 3 weeks over mounting concerns of slowing global growth. PFC and REC both are trading higher in today's day of trade. PFC is up about 5% with fresh longs coming in, a high open interest build-up of more than 8% in its March futures. So watch out for that. And the last stock that I want to highlight is actually Jubilant FoodWorks. It's up for an 8th straight day, which is its longest gaining streak since November of 2017. Back to you.
Right, Yash. Thanks a lot for that. That's the Fab 4 stocks that we're watching out this afternoon. Markets have picked up from the lows of the day, so we're now at 11,350 on the index. That's what you've got, 100 odd points under. Banks have also picked up a bit, but still 300 points given up. Taking a look at Hero MotoCorp, we spoke about that one and the kind of pain points that it's witnessing at a 52-week low for Hero MotoCorp. So it's picked up from the lows of the day, but down about 32% from its yearly high. Sumeet, Bagadia, what would you do with the Hero MotoCorp?
Hero MotoCorp, most of the motor stocks have given correction and most of the stocks are looking weak. As far as your question on Hero MotoCorp is concerned, we feel that the stock is support at around 2550 levels. Till the time the stock is not able to break 2550 on closing basis, it's better to avoid short positions at the current market price. Buying can be initiated once the stock is able to break 26-26-20 on higher side. The closing about 26-26-20 on higher side will take stock prices to 2800 or 2900 levels. At present, we will wait for 1 or 2 days. We will wait for fresh buying. We see that Hero MotoCorp has supported around 2550. So we are expecting some pullback or bounce back. We would have a conviction once the stock is able to break 26-26-20 on high side, and then we will go ahead and initiate fresh long positions.
Okay. That's a stock at a 52-week low. Stocks at 52-week highs. We've got REC that Yash just spoke about. The stock's up 8.5% today, which is close to its 52-week high of about 155.4. It's already at 155, so it's moved up from the last time we took a check. Info Edge is the other one. Its 52-week high is 1,926. So it's just about 20 odd points away from its 52-week high. Hemen, REC, Info Edge.
REC actually gave a breakout at 130, Devina. I'm not sure if it's a fresh buy, but yeah, technically it's still sound. There isn't been enough to worry about an overbought situation. And obviously there is something ridiculous which has happened in terms of volume. 5 crore 75 lakh shares on the NSE cash market. I don't remember seeing this volume. Last I saw it was in a couple of years back. Yeah, in 2017 May, Devina. So something has happened. There has been some smart buying going on. It looks good, should continue further. Coming back to the other stock, Info Edge, we are at all-time highs. We are in a mature uptrend. We have been for the last, 4 years and counting. So, little bit of resistance at 1920 should continue its up move.
Sumeet, how would you read into the dynamics of PFC, REC and the deal there?
I would avoid it as of now. I'm not reading it until and unless Supreme Court comes out with that Feb 12 circular notification. Because over there, the major impact is on power sector. And if that goes against the government and the whole thing and goes in line with RBI norms, then these companies will have a huge hit on their books. So I think for a short-term trade, it might be a good place. But till that time it sorts out, fundamentally, I don't want to take a call.
Okay, let's talk about Tata Motors. That has been one of your previous picks, and it had the brief moment of
glory.
Yeah, day under the sun.
Yeah.
But post that, just
fizzled out.
Yeah,
it's going to be like that for next 6 to 9 months. It's not going to pay back anytime soon, or because this is a restructuring of a business, and the whole call is depending on a Brexit and the US-China deal. That kind of a hit they've already taken on the books, and I think over there the cash flow improvement will happen over the next 6 to 9 months. So until that happens, I don't see any surprise upside to the whole system.
But the fact that they're looking to take up price hikes from April on the back of increase in raw materials, doesn't that raise questions as to how they're actually going to implement it in a market condition where volumes are itself a big dampener, and where people like Maruti is giving promotional offers and discounts to dealers and yet not being able to push through, and Tata Motors is looking at the increase in prices.
So if you see historically, auto industry has taken a price hike in January to push the sales in December, because December is the year of change, so people push away. And these price hikes incentivize the buying. The April happens because of new financial year, and even Maruti and others will do this. So it's not standalone Tata Motors which will do this. This is an industry trend to again push the sales in March, so that your year ending is much more better, and your year base is on the higher side, so that next year in FY20 you don't have to take much hikes. So that's why they front load, let's say, in that certain sense. And as you said, the consumer demand is already not there, so it's not going to hurt anything. So I think it will be absorbed by discounts itself, divided between the dealer and the company. But yeah, they have to take it. It's more of a systematic way they run into.
Okay. Interesting. By the way, mark the currency for a moment, 68.83. I remember at a point of time at the start of the trading day today, we were sub 69 as well. In fact, until the first 1 hour, we were comfortably sub 69. I think the intraday would be interesting because there's some bit of strengthening that has happened in the currency as we speak. The yields have dropped, so they are staying at sub 7 or near about 7.30, 7.31. But the rupee has certainly strengthened on an intraday basis, which is interesting to note. As we said, that while the other dichotomy that we're seeing today is also between PSUs. So while PSU banks are down and out, PSUs by and large are dominating the landscape on the Nifty. The top 6 names are PSU names, and the one that was not in the green, and GAIL, the intraday of GAIL would be interesting. When we started off the show, it was in the red. It is now up about 1%, so that too has inched up a little bit. Not a bad show by PSUs in the session today. Let's figure out if they feature in the dealing room chatter in the session today. Darshan Mehta joins in with his channel checks. Darshan, good afternoon. What are you hearing?
Yeah, so 2 stocks which are doing well. First of all, REC and PFC, both of them are doing well. First of all, the overhang of the stake sale is complete, but the other news is that there is buying that is happening because of the CPSE ETF that is there, almost 10% higher, that is REC, so there is enough traction that's happening on the counter. The other counter in which dealers indicate that some of the domestic funds are actively accumulating is Asian Paints. Is down in trade by 1%, but at lower levels there is accumulation that is happening. And over the past few days, ONGC ONGC is one of the stocks in which dealers have indicated that there is fair bit of accumulation. Today also it's up almost 5% in a market which is rather weak. The entire oil and gas space is doing well. So some of the HNIs have taken active positions in ONGC for a positional bet.
All right, Darshan, thanks very much for that. And ONGC was in the list of Sumeet Bagadia as well, going to go long on that stock. Other names, particularly from the metals and mining back. Metals as a pocket is looking weak in today's session. You've got JSW Steel that's down 2.5%. You've got Vedanta which is down about 3% JSPL is the other one that you should pull up to see how that one's doing. That too is down a good 3% Sameer, we spoke to the management of JSPL and they are also, aside from what's been happening with regards to raw material prices and iron ore prices, they've also mentioned the cheap imports from Iran being a big negative for the industry. How would you play this steel space?
So steel space, we have been away even in the up cycles, and I feel now the down cycle is somewhere in, because over there if you see 15% of the demand goes to auto industry. And if I account for auto ancillaries, that bumps up to around 22%. So that is the highest growth factor as of now. Then comes roads, then comes construction. So that these two places are slowing down. Now if this gets slowed down on the production side of it, then I think next 6 months will be again a drag for them. And the prices are being taken up, but the only point is they are very careful in price hikes. They don't want to disturb whatever the offtake at the dealer inventory is there, because if that piles up again, they might have to start taking.
But is that a threat considering the cheap imports? Do you see that being a threat?
See, I think in metals you'll always find a cheap import as a threat. But the only point is if you're able to cut down again that prices. Anti-dumping only helps you while the currency helps you out. Now currency is from 72 to 69. So again that gets cheaper. So I think even that motivation won't help you. Even a 5% or 10% of anti-dumping duty will not help you. And that is a systematic competition which you have to face. Now how they differentiate in that system, that's why commodities become very difficult. Because for me, importing at any point becomes much more beneficial. And you don't have any technology or any kind of a product which I only take from you and I can't import it any day. That's where even Coal India or any other commodities you see have an issue running up.
But the PSUs are doing really well in the session today. Speaking of Coal India, that too has inched up a little bit in the last 15 minutes. And I think it's all about PSUs, to be honest. I know you're talking about commodities, but I'm just tying it with Coal India and just talking about how the PSUs have done. Look at ONGC in the last 1 hour has certainly shot up another 2% as trading 4.46% higher. Sumeet Bagadia, would you take a position, a trading position, a BTST into any of these large cap PSU names?
See, most of the stocks are looking good to me. At present, the best stock that looks good to me as a BTST is MGL. We feel that MGL can give a good move from present levels. Stock has small resistance at around 985 levels. Once 985 is taken away, we can see a very good move till 1030 or 1050 levels. MGL, one can initiate long positions in MGL at the current market price with the stop loss to be placed at 945 levels on lower side, and above 985 we can see a move till 1030 or 1050 levels in the next couple of days.
Interesting. Hemen, everything is up and about. Would you take a trade? Any of the large cap PSU names?
I think
ONGC, Coal India, anything?
Everything, Neeraj, like you said, has moved a bit. So maybe Coal India to some extent. Yeah.
It's interesting. As of Friday's close, the CPSE ETF had a subscription of almost 6 times. So, for an offer size, issued base size of 3,500 crores by the end of Friday, subscriptions worth 20,000 crores were received. This has about 11 PSU stocks, including Coal India, including an IOC, NTPC. So, you're going to probably see a lot more, fluctuation of prices and interest building up around most of these names within the CPSE ETF as well. Aside from that, moving on to some other names within the broader market space and what's been buzzing about. So within the Nifty 500 now, I'm going to be focusing on some of the losers in trade right now. So Z-Learn has moved down about 6.5%. Edelweiss, which was just about nudging 200 a few days ago, is given up 6.5% today and trades at 184. Vodafone Idea is down 6%, Jindal SAW is down 6%, and Dish TV2 is down another 6% in trade. Coming on the likes of Edelweiss, and what will you do with the business model as such, and these kind of businesses?
Yeah. So I think NBFCs, we are very particular. So we are sticking to SGFC, LIC Housing, and Canfin. Over there, we don't see any funding issues. If you go to private mid-cap, let's say in that kind of NBFCs, they are facing a lot of funding issues. Their current funding is coming two ways. One is the NCD, which is long-term, higher cost. Second is the asset sales. Asset monetization really is not a continuity thing. It will deteriorate as the assets go down. And I think dispersals are the main figure which I'm looking at. I feel this quarter and next quarter, I feel dispersals will go down further, because the funding has become much more higher concern now. And CP markets are really not supporting the system. Even after the rate cuts, I don't see the rate cuts happening for them or cost of funds reducing for them. So I think over there it's better to stay away and stick to the big leagues.
Okay. By the way, Jet Airways is up and about. It's now trading 12.5% higher in trade, 14.5% higher in the session, 258 and counting, and 39 million shares traded. So look at the volumes there. They're just moving up as we speak. Naturally would do that, but the pace at which the volume uptick is happening is quite stellar. I know Hemen said that he doesn't want to trade Jet Airways. But Sumeet, Bagadia, just quick thoughts on Jet Airways as a trade.
See, the stock is moving on a news. It has given a very good move today from the levels of around 230. The stock is quoting at around 258 levels, and if the stock gives closing above 255 to 58 levels, then there is a possibility that this trading move can continue till 270 to 75 levels. Those who have taken long positions, trail the stop losses and hold the long positions. One can maintain trailing stop loss at around 248 to 50 levels.
Well, look at that move. It's really quite stunning, really, what's happening to Jet Airways as a stock in the session today. Multiple stories doing the rounds. We don't quite know which one would work out, whether Naresh Goyal exits, whether Naresh Goyal stakes come off, what kind of deal gets reached. I think all of that will be known in some time, and we'll, of course, report it once the official statements are out. No point kite flying. Since last 8 minutes of trade left, let's talk about what are the closing strategies of our experts. Hemen, to you first, your top closing strategy.
A BTST on Canfin Homes, Neeraj.
Okay. Target stop loss?
Is 329, stop loss 326, target 335.
Okay. Sumeet, what about you?
Dr. Reddy looks good to me. It's quoting at around 2770 levels. I think above 2800 levels, the stock can move up till 2850 or 2900 levels. One can initiate long positions at 2770 with the stop loss to be placed at 2730 on lower side. 2730 should be the stop loss for the upside target of 2850 and 2900 levels.
Okay. So that's the verdict on what's happening on the BTST calls. Just final thoughts from Samir Kalra before we let him go. Samir, you take a lot of contra bets. What about some of the commodity names? They aren't exactly at the lowest point, but they've come off from the slightly higher levels that they were trading at. Would you go out and bet on any of the commodity names?
See, in commodities, we are very specific and we hide under Hindustan Zinc only. Because if you see, the commodity over there is very unique in nature. The import is not a barrier over there. There is a residual product which comes out and which is very less in, let's say, capacity globally. So I think, and there's a lot of cash flow. The only negative is if the Vedanta group really takes it over and merges it out. That'll be the only point where I sell it. Otherwise, I feel the valuations as of now is really good, taking into zinc usage and the silver output they are giving.
Okay, but frankly, it's all about Jet Airways. Now, Sumeet, let's kind of do a small analysis out here. If indeed the news flow is that Naresh Goyal steps down in Jet Airways, lenders take control or some other shape and form, is that positive from a stock investor's perspective?
So for me, that kind of news itself, or that kind of, so what was happening, they were grounding every 4-5 planes every week at least. So over there, the stock price wasn't reacting to it, right? That's one story. Second was what bad can happen. Now, when lenders gave this kind of a statement that IBC is the last resort and IBC will really not work, then you got to know that they are working to take it over. And I think the old promoters getting out of the way will make it more beneficial for even Etihad to reconsider it. Because I think that's why they are even lagging. They're not taking a final call that, okay, we want to exit and this is the price. They're just hanging on the process. And I think 31st March is their board meeting again. So that will decide it. Even if Etihad backs out and clears out of the way and says 150 is my exit price and other things, I think right now Jet Airways needs money and lenders will be able to support it. So I think this is the first step, which is positive. And second step might be a new strategic person coming in and running the whole airlines. But I think that will take 6 to 9 months. That won't happen as quickly as even lenders anticipated.
Okay.
First point is they should get at least 1,500 to 2,000 crores to address the whole situation as well.
So are you a buyer? Are you a seller? Are you holding on to positions? Are you not doing anything of this?
We've started nibbling on Friday itself.
Okay.
And luckily we've got this move. But I still feel there is a certain up and down which will come. And you should buy it in tranches, not in a bulk of it.
All right, that's on Jet Airways. Thanks a lot, Sumeet.
Thank you.
I really appreciate you joining in into this discussion. That's Sumeet Kalra with his views. Just 3 minutes left to go for market closing, so we'll start winding down the markets, Neeraj.
The market's not the best of places. In fact, Jet Airways was showing a completely opposite move to what the index is doing right now. So the sentiment on the market not the most positive, but I must say we're not closing at the lowest point of the day. We are in the red, but not at the lowest point of the day. The mid-cap and small-cap indices, they were faring, at least the mid-caps are faring a bit better, and they still close a bit better. But the small-cap index has had some stick, has taken some stick, so about 1.6% will be showing in the market breadth too. Let me talk about the large caps first. What's moving and what's not? PSUs dominating the move in the session today. It's been all about PSUs. So ONGC, IOC, Coal India, HPBP, Power Grid, GAIL. Well, save for Bajaj Finance and Dr. Reddy's, it's in a PSU-dominated move on the large cap end. That's about it. That's what's gaining. What's not gaining? Z Entertainment, 4% lower. Bharti Infra, commodity names like Bharti, Vedanta and JSW Steel correct a bit. Autos, Tata Motors, Mahindra and Mahindra correct a bit, and financials have taken a bit of a stick today. ICICI, Kotak, HDFC, HDFC Bank, all of them have looked wobbly. So banks and commodities accompanied by autos are the principal losers, PSUs the top gainer. But if the large caps have been dominated by PSU gains, I guess mid caps too, PFC, RDC, etc. have had their share of gains, Devina. What's standing out?
Well, a few of the names are doing well, but at large, the index as such is not, seen a recovery as the large caps would have seen the pickup from the lows of the day. So it's been a hard day for the mid caps and small caps. And I'm going to start off first with the losers. Edelweiss taking a knock in today's session is down about 6.5%, had gone up to about 200 from there, come down to about 185 in a matter of 2 to 3 trading sessions. The next one is Z-Learn, the entire pocket. So you have a which is down on the index, Z-Learn, Dish TV, all of these names are reeling under some amount of pressure in today's session. Vodafone Idea continues its downward grind in today's session, is down closer to 6.5% at 30 now. Then you have the likes of a Gen Irrigation, Arcom, which is looking weak. PNB Housing Finance, we've got Cummins India, which see some selling pressure, and the likes of Dilip Buildcon. So now I think this is the third or fourth straight day of losses coming in for Dilip Buildcon after that stupendous run-up that the stock had seen over the last one and a half odd month. Interglobe Aviation, though, even though there are upgrades coming in there, a second upgrade coming in from Credit Suisse today, 1650 is the price target. But the stock in today's session looks weak, nothing compared to what a Jet Airways has done in today's session. And in fact, talking about Jet Airways, the stock finally, as it approaches closing, 26 seconds left to go for closing, and Jet Airways is sitting pretty, 15.5% higher, 261 is what the stock is doing right now. REC, PFC, again the PSU pocket, and not just on the index, in the broader market space, doing well. So REC is up about 11%, PFC is up 5%. Cathway Cables is doing well. TTK Prestige, heavy volumes in today's session, and it props up the stock as well. Symphony, we've been talking about how it's going to be a really hot summer, and we've already started seeing that. And most of the air cooling companies are likely to benefit from the same and a pickup in demand of that. So the stock was up about 2.25%. Divi's Lab and BHEL are some of the other names that are doing well for themselves. No big bang move there, but 2.5% stable, comforting number there. But today's session, coming out from last week where we still managed a positive weekly close, the start of the week has been slightly more disappointing.
Yeah, but you would have to say that we didn't close at the lowest point of the day, which is a good thing. But save for PSUs, no gainers as well. Bring up the participation. Has it gone up or does it stay low on the cash side at least? I mean, nudging 30,000 crores, so 1.5 hours, doing 50% more. Of the turnover at 2 p.m. it was 20,000. Yeah. At 3:30 it is almost 30,000. So a bit of a pickup for sure on the cash side in the last 1.5 hours of trade.
Yeah, and on the NSE F&O, the number has picked up. So about from 6 lakhs is about 8 lakhs, 8.1 lakh crores. So that's not a bad number to go by either. The broader market breadth, I don't think there's any difference from what we started off with and what we're going to probably close out with. So as you can see, a clear straight line through the day. No question on whether or not there was a tussle between bulls and bears. It is a clear down and out day for the bulls. So declines of 1230, 325 stocks announced.
Yep. And yes, the participation. Reliance continues to find mention now in the losers list. Friday it was amongst the top draws. Today it is, well, the second worst performing stock only after HDFC in terms of point contribution. Actually, neck to neck, both of them in terms of point contribution. But Financials and Reliance, essentially the two names that have been the principal contributors on the losing side. PSUs dominate, save for HDFC Bank, which actually managed to claw its way back into the green, Devina. Both HDFC and HDFC Bank were in the red. HDFC Bank somehow moved into the green, which is an interesting move. Yeah, and interestingly now, the last few months, HDFC Bank has actually pipped over Reliance in terms of being the top weighted stock on the index. It holds a weightage of about 10.3% and Reliance about 9.7%. So that too adds a little bit of, tipping of the balance there. Yeah. Anyways, final thoughts from our experts. Sumeet, Bagadia, the Nifty Bank, since that's the key determinant, how does this close augur for the Nifty Bank?
Well, see, I think we should wait for next 1 or 2 days. 29,400, 29,500 is resistance for Bank Nifty. Once the levels are taken away, then we will see a move on higher side. Till that time, 29,400, 29,500 are not taken away. There is a possibility that we might see some more correction of all in index till 29,100, 29,000 levels. So at present, for buying, it's better to wait for next 1 or 2 days.
Okay. Hemen, what about you?
And a view on Reliance as well, Hemen, if you can.
Yeah, not a problem. In terms of the markets, I think we're going to take a few days to consolidate. Nothing much happening. A bounce tomorrow, small one possible. We've seen bearish gaps on the Nifty as well as the Bank Nifty. I think the Nifty and the Bank Nifty both could make an attempt to cover up this gap. I don't think it is going to be successful. Then we'll see another decline coming in. VIX is off the high of 17.0. We're at 16.67. Having said that, it's going to be volatile. Expiry, a recovery not sustaining. I think the whole week is going to get pass by without anything substantial happening. Coming back to Reliance, we walked on a small correction. A recovery seems to be in the offing probably tomorrow, if not day after. But just one cause for concern, the daily MACD is on the verge of giving a sell. It's not given today, it could probably give tomorrow. Long term, Reliance is hunky-dory. Short term, I think we could be slipping into a period of consolidation. Neeraj.
Okay, got that. Hemen as well as Sumeet, thank you so very much, both of you, for joining in and sharing your thoughts on the platform with us. And with that, it's a wrap on this edition of Countdown. From Neeraj, myself, and the entire team that's put the show together, thank you so much for watching.